Hey moneymakers, welcome back to another episode of Taking Stock Live. I'm back in the studio tonight, so no kids interrupting the show like we did last week. So happy to be back with you and happy to see you again. Your lovely comments. I can't say your lovely faces, but happy to have you back in the chat. So what are we talking about tonight? Well, West Indies Petroleum has been a hot topic since their listing by introduction last year, and the explosive growth of their stock. We finally have the chairman of WIPT joining us tonight, Charles Chambers, and then later on in the Analysts, we'll be looking at the performance of Fontana Pharmacy and what that company has been up to lately. But first, let me know in the comments what part of Jamaica or what part of the world are you joining us from. I'd love to know so I can give you a shout out. Also, make sure that you sign up for the newsletter at moneymediaja.com or getmoneynews.com. Sign up for that newsletter, subscribe to the channel, and tell a friend that Taking Stock is on. Now, come on, let's get this money.
First, here's what's hot, brought to you by JMMB Group, your best interest at heart.
The Bank of Jamaica is lowering its base interest rate to 5.5%. In December, the BOJ had announced that they could keep interest rates at 5.75% as the effects of Hurricane Melissa started to filter through the economy. However, according to the central bank, the direct impact of the storm on inflation is less severe than they expected. According to Statin, inflation in January was 3.9%, which is just below the BOJ's target range of 4 to 6%. TransJamaican Highway wants the government to compensate them for the 15-day suspension of tolls during Hurricane Melissa. The suspension erased $3.5 million from its fourth quarter revenue. Tolls were suspended from October 26 to November 10, the days leading up to, during, and after the Category 5 storm. According to TJH, the government breached the company's property rights when it ordered the suspension. The company recorded a 3% dip in revenue for the quarter, bringing inflows down to $22 million. However, for the full year, TJH's revenue was up 10% to $91 million. Net profits climbed 17% to $37 million. Woodcats has released the basis of allotment for its recent IPO. Members of the public who applied will receive the first 25,000 shares, then 67% of the rest. Applicants in the reserved pools will receive 100% of the shares they applied for. The Woodcats IPO was oversubscribed and closed on February 12. Woodcats is one of the island's main manufacturers of wooden pallets, crates, and related wood products. The company offered 833 million shares, valued at 90 cents each, to raise just under $750 million. Woodcats will be the first junior market company to list on the stock exchange since the capital limit was raised to $750 million. Agostini has received approval from the Fair Trading Commission to finalize its acquisition of Massey Distribution Jamaica. The deal was first announced in February 2025. However, it stalled over concerns that Agostini could control all three insulin brands distributed in Jamaica. Approval reportedly depended on divesting one of the brands to prevent a potential monopoly in the life-saving drug category. Agostini's CEO said Jamaica is a key market for the company. He added that the closure of this transaction is strategic to their long-term growth. U.S. President Donald Trump says he will impose a 15% global tariff on all goods coming into the U.S. The move comes as the U.S. Supreme Court overturned the previous 10% tariffs, which were to come into force on February 24. Trump said his administration decided to raise the levy after a review of the Supreme Court's, quote, ridiculous decision. In a 6-3 decision, justices on America's highest court found that the president had overstepped his powers when he introduced sweeping global tariffs last year, using a 1977 law known as the International Emergency Economic Powers Act. The USA has already collected at least $130 billion in tariffs using the act.
What's Hot was brought to you by JMMB Group, your best interest at heart.
Are you interested in buying land or property? Here are the steps you should follow. Step 1. Find out who is legally authorized to sell the property. Step 2. Ensure all property tax payments are up to date. Step 3. Consult an attorney at law who will guide you through the process and protect your interests. You can also use eLand Jamaica to check on matters pertaining to your property purchase. For more information, contact the National Land Agency at 876-750-5263 or 876-946-5263. Email asknla@nla.gov.jm or message us on WhatsApp at 876-418-5089. The National Land Agency. One agency, one goal to serve you better.
Welcome back. Let's see who we have joining us online. We've got techie investor JR. Greetings all the way from St. James. We also have Dwight in the house as usual from Spanish Town, I believe. Philberg is in TCI. We've got Unbothered Chico. Still waiting on the cold front in Jamaica. You know, I was thinking the same thing today. I was like, it's hot. Where is that cold front is here? But this evening is actually kind of cool, probably because it rained earlier this evening. So it kind of cooled the temperatures down a little bit. Nana Sen says, watching from the cold north, minus 18 to be exact. Oh, I don't grudge you. He says, it cold bad. Don't grudge you at all. Adrian Lawrence says, it's been a while since I've been able to watch live, watching from Mobay. Thanks for joining us live, Adrian. Roswell says, good evening to all viewers. Ezekiel says, government should extend the existing contract for compensation, responding to the TransJamaican Highway story. Camisia says, LGTM, let's get this money. Love it. Jackie is joining from Lake Worth Beach. Where is that? Lake Worth Beach. Where is that, Jackie? Drea is in, Day and Night Construction is in Fraser's Content, Spanish Town. Vice Matic say, yeah, I catch the show this week. Love to have you here. We also have D. Duncan representing from the Bronx. Vice Matic is in Mobay. Oren is in the Republic of Ochi and says it's chilly that side. Ezekiel confirming it's pretty cool in Ochi. And we've got Yamfoot watching from Grenada and waiting to get rich from Woodcats. So yeah, you heard the news. Woodcats IPO was oversubscribed. They recently announced the basis of allotment, as you saw in What's Hot in Business. And so now we're just awaiting the listing date, whenever that finally lists on the JSE. But tonight we are talking about another recent listing, and that is West Indies Petroleum. It was not an IPO, rather they opted to do a listing by introduction. And since then, the stock has surged at 1.2,000%, giving the greatest returns for 2025 of all the stocks listed, and so far for 2026 as well. So here to discuss the latest results as well as where WIPT is going is the chairman of West Indies Petroleum, Charles Chambers. Welcome back to the show, Charles.
Hi, Kalila. Good evening. Very nice to be here. Good to see you again.
Good to see you again as well. So we did a feature on West Indies Petroleum last year before you listed, but for those who didn't get an opportunity to see it and are just now becoming familiar with the name, just tell us what West Indies Petroleum Terminal does, specific to the terminal aspect, since that's the one that listed, versus the overall company.
So quickly, the overall company, West Indies Petroleum, is a fully vertically integrated fuel import and distribution company. It starts with us trading and importing product into a terminal at Port Esquivel, which is called WIP Terminal, and a company that was listed. And then from there, breaking bulk and distributing product through gas stations and retail sites and through the shipping industry, through a company called WIP Energy and into the bunker business, of which we're a part. So WIP Terminal, which is the heart and soul of West Indies Petroleum, is a storage company that has 750,000 barrels of storage and a lot of what we call advantaged logistics, which make it a very unique asset within the context of Jamaica for the petroleum products that it stores and distributes across a wide breadth of businesses in Jamaica.
So why separate the terminal and list only that portion of the business rather than the entire business?
A couple of years ago, we decided that we wanted to restructure the business for efficiency. So West Indies Petroleum, generally, what we did is we imported the petroleum products that I just spoke about, and then we had a line of business that was in the bunker business. So we sold fuel oil and diesel to ships in the south coast of Jamaica in Kingston, so container ships there, cruise ships on the north coast. We distributed to a wide network of gas stations. We're involved in the lubricant business, and we had the storage business. When we restructured, effectively what we did is we created individual companies with their individual boards of directors for efficiency and to drive the profitability of each of those entities. Even though the storage company is the heart of West Indies Petroleum generally, we decided that strategically it made sense to list that company first in order to do a couple of things. One was to provide transparency on the company. We've done a lot of work kind of letting the Jamaican people know about what it is that we do over the last couple of years, but through the listing to provide transparency on the financial status of that company, and then go through a price discovery process that would give us an indication of what investors thought about and think about the company's value. And so additionally, I'd say that, a private company versus a public company has a lot of advantages. Its shares are divisible and tradable and can be used as security for debt raising and for as basically currency in mergers and acquisitions. So strategically listing the terminal made a lot of sense for us, and we did it, we did this listing by introduction, which was quite novel and unique.
I noticed that you mentioned you made a strategic decision to list the terminal first. Does that mean that you do intend to list the other parts of the business?
Well, the board of West Indies Petroleum made the decision a couple of years ago that we wanted to be a public company. And this is a very important thing in the life of any company. And you think about, huge companies like, Facebook or big companies listed on a New York Stock Exchange, for example, when they decide that they're going to go public, generally what it means is it brings in a lot of capital that gives that company a quantum leap and really changes and transforms that the future of that company. And so the board, in deciding that we wanted to be a company, recognized that we needed to have capital to grow and to transform in the way that we see ourselves. And we made the decision that we wanted to be public. So there are a couple of different companies on our portfolio. WIP Energy is one that people probably know. You probably see a lot of trucks out there branded WIP Energy. And WIP Energy is quite an interesting company because its product actually gets into most motor vehicles and into probably the tanks of cars of most Jamaicans out there today. And so, we made a decision at some point in the past that we wanted to be a public company, and we structured ourselves to do that. So the strategic move with WIP Terminal made a lot of sense now. And when the time is right, we may very well consider doing other things and coming public with other companies.
So Tavares wants to know, when are we getting WIP Energy on the market?
Whenever the timing is right, we'll, I suppose that's something that will come to the market. We don't have any hard information on dates or anything like that, and no decisions, concrete decisions have been made to bring it, but it's something that we consider for the future.
Why make the decision to go listing by introduction rather than doing an IPO?
Well, we weren't trying to raise capital. I think that we wanted to prepare ourselves in a certain way by having a listed company that we would go through the rigors of, the reporting, and then a price discovery, and we've learned a lot. We've learned a lot about how Jamaicans feel about investing in a security like this that presents a unique asset class, and it's taught us a lot, and this is what we expected. So strategically, it made sense for us to list the subsidiary of WIP Energy first. And not do it in a way that would cause a tremendous amount of confusion in the market by trying to raise money in maybe 2 or 3 different companies. And so the listing by introduction achieved our goals, and we're quite satisfied and happy with what's happened so far.
Well, it's also made it really difficult for interested investors to get their hands on some WIPT shares, because not many people are selling. So you listed by introduction, the shares are there, but then nobody's really selling. So it's hard to trade these shares.
Well, there are lots of reasons why it is that we're not trading the shares, but we never really intended to trade a large amount of shares. There are some shareholders that are selling shares, and I think at the moment maybe we're in a blackout period. But I think that more shares will come to the market once the blackout period ends. And
what's the blackout period?
The blackout period is a period in which we're waiting for our annual financials to be released. We expect that they'll be released in a couple of weeks, and then shareholders who are the main shareholders or insiders will be allowed to trade again once that blackout period ends.
So during that time, the main shareholders cannot sell.
That's right.
Okay, understood. So a couple of weeks' time, we're going to look out for that annual report from WIPT. Interesting. But do you think that this is the reason the stock price has surged as dramatically as it has? Because you listed at 50 cents, and last I checked, the share price was at, where is it now? $10.46 today.
The appreciation in the price was quite flattering, to tell you the truth, and we didn't necessarily expect that it would have appreciated in that kind of a way, but quite flattering. I think that we've a couple of things. We've done a lot of work making the market aware of what West Indies Petroleum does. So a couple of years ago, we knew that we were a company that was supplying gas stations through the length and breadth of Jamaica, and that our product was reaching Jamaicans basically everywhere. But we were quite unknown. So we went on this sort of education process to let Jamaicans know that we were doing, which was quite in line with what we did with the restructuring of the company and moving towards, the individual companies having their identities, and us taking the view that we should be a public company. I think that those things definitely played a role in the enthusiasm around investing in this company, especially when there are no other companies like it on the exchange. And I should say that the asset itself, WIP Terminal, is quite a unique asset. It is a huge storage asset that has significant logistical advantages, which allow us to bring fuel into Jamaica at a much more economic value than any other facility like it in Jamaica. And because of where it's situated in the deep water port that it's situated, with a lot of the other physical features on it, we think that trying to replicate that product, that port, that terminal, to build another one like it would be so impractical that it's technically impossible. And for that reason, it's quite important and represents a value proposition that is incomparable. Notwithstanding that fact, we also listed the company at its book value. So the value of the company for its nuts and bolts and for the steel that's there is completely separate than the value it creates because of the economic value that it brings, and therefore in the listing itself there was a huge disconnect between the price that we listed it at and what its value is today and what our perceived value of it was. So I think for investors, for our own investors, and for investors that came in an early way, we left a lot on the table, and I think that's generally a good model. It's not novel to us. I mentioned Facebook earlier. I think that this was their model as well. They came at one price, and as cash came in and their business model unfolded, what you found was that the price of their shares grew and grew and grew. And I think that there's some of that also adds to this incredible price appreciation that we've seen.
Based on what you just said, right? Listing at the book value versus the perceived value and the economic value to Jamaica, do you think the current stock price now more accurately represents what the value of this company is? Or then? What I'm trying to get at, is the stock accurately reflecting the fundamentals of the company?
I think that the market determines what the stock price is, and I'm not really in a position to determine where the market should go or not go. Like I said, I'm kind of a little flattered with where it's gone. But I go back to what I said earlier. We left a lot in there for price appreciation. There are many factors that obviously have led to the significant price appreciation, but generally as a framework for listing a company goes, we think it's a winning strategy, and certainly would advise any other company coming in the future to leave a lot on the table so that your investors are rewarded, because those are the people that are going to carry you into the future. And so it's probably a bunch of different things, but we like to we believe that the value that we initially listed at was much lower than the actual value. Whether that the real value is 10 or 20 or I don't know, whatever the number is for the market to determine. But we are flattered by the price appreciation that's taken place.
So you don't think it's overpriced?
I'm not a market maker, and I'm not in a position to comment on the market. I sell fuel generally.
Fair enough. All right, let's talk about the company's recent financial results. So profit impressively more than doubled to $2.29 million in 2025. Revenue not as impressive in growth, but still grew. So it's up 8%. And so what I'm wondering though, the profits doubled, even though Jamaica's fuel demand was basically flat. So what drove this growth in profits?
Well, obviously, I think that what it means is that we've taken a greater share of the market. And WIP Terminal doesn't only store fuel for the local gas station market. We also store fuel for the bunker market. And technically, the bunker market is an export market, so you wouldn't necessarily see those figures. We did, West Indies Petroleum, the parent company, in the bunker space, did a JV with a company called Sunoco. You may be familiar with them. They recently bought Parkland. Parkland owns Sol. Sol owns the Texaco brand in Jamaica. Huge company. And we have a JV with them for the distribution of bunker fuel in Jamaica, which has, I think, put us back into the position of being the number one bunker company in Jamaica. The bunker business is one of significant volume just because of its nature. So if you sell, a delivery to a cruise ship, a container ship, we think about it in thousands of tons, which is sort of millions of gallons for one single delivery. And these things would have contributed to the growth in revenue and profitability, even though from a Jamaican perspective, you may not have seen growth. I think it's also noteworthy that we've structured some partnerships on the supply side and on the offtake side, which has increased our market share in Jamaica for the trading company, which is WIP Energy, and as a result, our volumes and ultimately our profitability would have been up despite whatever else happened in Jamaica.
Is it sustainable increase in profitability though, or was this one-off?
I think that it'll grow. We see ourselves as not just being confined to Jamaica. I think we've built a compelling business model here where we have an asset that is quite advantaged and unique through WIP Terminal. From WIP Terminal, we distribute to gas stations, from single owner gas stations all the way up to some of the multinational gas stations across Jamaica. We see our playground as being the Caribbean, and we think about the Caribbean as anywhere that the Caribbean touches. So all the way from northern Brazil through Central America, all the way up to Mexico, and we would very much like to replicate the model that we've created here by using the shares in a company like WIP Terminal as currency to go and acquire other terminals in places like Guatemala or Colombia, or places that also have a similar opportunity to where you can import fuel in price advantaged way and then distribute to networks of gas stations in those countries. So we think there's going to be a tremendous amount of growth and profitability in the company going forward, short, medium, and long term.
Well, let me ask you this then. What global oil market trends are you watching closely right now?
The Caribbean is very, very exciting. It's hard to ignore. We think about Venezuela, and everybody probably knows this now just because of what's happened recently with the U.S. move into Venezuela. But, Venezuela has the largest deposits of oil in the world, larger than Saudi Arabia, larger than Russia, larger than any other place. And right next to it is Guyana, who seem to be discovering more and more oil every day. And somehow in the Caribbean, we haven't been able to translate that into what I would define as energy security. So yes, we have fuel that's available to us, but fuel isn't available to us at a price that makes us competitive. And to a large extent, maybe that's because of the way that our fuel landscape and developed as new members of the Commonwealth in the 1960s and beyond. But I think that we need to be much more proactive in defining what our future looks like and strategic. At West Indies Petroleum and all of the companies under WIP, we think in strategic terms. And I think there's a tremendous opportunity to connect some dots between these massive reserves of the cheapest form of energy that exists on the planet into usable energy for all of the countries in the Caribbean that can drive prices down and improve the lives of the people here, much like you would think of Trinidad having a refinery or Curacao or other places. And to me, that represents a huge opportunity and is something that we're very keenly focused on.
So what are the opportunities from those developments for your business?
There are distribution opportunities all around the Caribbean, and there are opportunities to trade fuel that comes out of Guyana and Venezuela. But I think one of the biggest opportunities that we see in the Caribbean is to restart a huge refinery that exists in St. Croix, and to leverage that through ownership, potentially by a bunch of Caribbean countries, and create cheap fuel available and make it available to all of the countries in the Caribbean, and not just individual countries through that ownership. That I think is an opportunity that's sexy, and one that we're spending some time thinking about.
Let me take a couple of questions from the audience. Nanosense says, any plan of doing any manufacturing of your petroleum products in Jamaica? Remember, you can take advantage of Caymanas.
Is that the Caymanas racetrack? I mean, I'm not sure.
A special economic zone.
Well, so we're in a special economic zone at the moment. So we don't have any plans like that. At Port Esquivel, where WIP Terminal is, we are in a special economic zone, and we're connected into a very large dock that has very deep water and a lot of storage. And that by itself, all of those things combined, being in the special economic zone with these assets, the dock and the deep water pier, collectively give us the logistics which allow us to bring fuel at a economically advantaged level into Jamaica. Like I said, I think I said this earlier, I don't think that there are any other opportunities to do something like that in Jamaica, because there are very few deep water ports that are available. And, and that's why you don't have a huge refinery here. But it doesn't mean that we have to be sort of left out in the cold. I think that in a place like St. Croix, where there is a massive refinery in a deep water space that operated on a level that was something like 30 times the size of Petrojam in the past, that there are real opportunities for the Caribbean people to restart that refinery and have that product available in a way that makes sense. To have the I was in Guyana last week at a conference there that was put on by the Guyanese government, and
the energy conference.
At the energy conference, indeed. And the Prime Minister, in his address, what I took away from him is that it doesn't necessarily make sense for the people of Guyana to have a refinery in Guyana, but they want to have their oil go into a refinery that produces oil at a low enough cost that when it is transported back to Guyana can transform not just the oil sector, but all of the sectors by having cheap fuel there. And I think that opportunity is the same, not just for Guyana, but for all of the countries in the Caribbean. And we need to have a little bit of vision and foresight on to try to make something like that happen.
Very interesting indeed. Next question comes from Lovebirds. How do you plan to grow WIPT? What will it look like in 5 years?
Well, first of all, we'll grow WIP Terminal by adding volume as we take market share in Jamaica, and then by growing the bunker business primarily, by bringing fuel into the terminal, which is at a low enough cost that will make Jamaica an alternative to somewhere like Panama. So when I think about Panama is probably the largest fuel destination in this region, and it makes sense because of the Panama Canal. But they don't have a refinery there. They import all of their product, and all of their product goes by Jamaica, either coming from the U.S. Gulf Coast or from Europe or from Africa, and it just goes by here. And we in the last year we've been quite successful in bringing product here at the same cost as Panama, and that's led to a growth in that business, which is, technically, that could grow to something massive for WIP Terminal, because WIP Terminal is the terminal that stores and supplies that product. But the real growth opportunities come through M&A in the future. It means that WIP Terminal needs to go and acquire Colombia terminal or Guatemala terminal or Mexico terminal, and to replicate what we've done here and grow through not organically but through acquisitions, and I believe that is very much in the cards for us in the future.
As you mentioned acquisitions, next question comes from Tavares. Is the goal to acquire the government's divestment in Petrojam?
Well, I wasn't aware that the government was having a divestment in Petrojam.
I was just thinking the same thing. As soon as the words came out of my mouth, I'm like, is the government divesting Petrojam? But if they were to, would you be interested? I
think that we're quite opportunistic in the way that we think about life, and we live in Jamaica. Jamaica is our home. Our kids go to school here. We go to the hospital here. We live here, and to the which is quite unique within the context of big fuel companies, and we would be open to any acquisitions that would be beneficial, not just to the shareholders of WIP Terminal and for WIP Energy and for West Indies Petroleum, but ultimately for the people of Jamaica.
Interesting that you say energy and not necessarily petroleum, because as we know, the world is kind of in a transition phase. So renewable energy is becoming much more of an option. We have solar, wind, we also have LNG, we have different sources of energy. So are you looking to transition from a fuel based company to more of an energy distribution point?
We very much think of ourselves as being an energy company today. We are connected to the end user. That end user might be a cruise ship, it might be a gas station, it might be an individual, and we feel very privileged to be in that position, and would very much like to continue to distribute energy to our constituents wherever they are. We're not really sure what the fuel of the future is going to be, and I don't think that anybody really has that answer. I guess that it's probably going to be something liquid. The world is geared in an extraordinary way to support a liquid infrastructure because of the enormous volume of crude that's available and how it has been connected directly to our lives. It's really extraordinary when you think about it, and so to a large extent, I think that a liquid fuel is going to be in the future. The Caribbean, Central America probably will change in a different way than other markets. Probably it will lag behind, which is interesting, because I'm hard pressed to believe that there's going to be any fuel in the next 30 to 50 years that is going to be as cheap and as efficient as petroleum. And we see this. We see, lots of car companies and other companies backing away from, EV and other things at the moment. And if you think about individuals, we want our Earth to stop warming, but we also don't want to pay more for energy. And so there is a give and take there. And I think at some point in time, as more and more alternative fuels like solar and some of the other ones that you mentioned, not the hydrocarbon ones, but the real renewable ones come on stream, that potentially what happens is that instead of us continuing to warm, maybe we start to cool again, and then this limited resource, even though it's so vast at the moment, becomes quite attractive. So I think petroleum is going to be around for a very, very long time, and I'm not the only one who thinks so. I think if you were to go and have a read of any petroleum analyst that's worth their salt, they would say the same thing. You're looking at something like 20 growth of petroleum consumption all the way through 2050. So you have another 25 years of this thing growing and growing and growing before it potentially starts to decline, despite the fact that much more renewables are coming on scale. At some point, like I said, the renewables become less and less interesting because of the cost associated with it and people's either inability or lack of desire to pay more for the fuel.
Thank you so much, Charles. Great interview and great having you.
It was a distinct pleasure. Thank you so much. Great to see you again. Thank you for having me.
Charles Chambers, chairman of West Indies Petroleum Terminal, the newest company to list on the Jamaica Stock Exchange. Soon to be, Woodcat's IPO will be the newest, but up until that listing actually occurs, West Indies Petroleum is the newest. So it is time for tonight's poll question, and it is about TransJamaican Highway. So TJH Army, stand up. Where you at? I see you guys selling T-shirts in the chat. Here is our question. Should the government compensate TransJamaican Highway for revenue lost during the suspension of tolls during Hurricane Melissa? Should the government compensate TJH for the revenue lost during the hurricane toll suspension? Here are your options. A, yes, that's over $3 million lost. B, no, it was a national emergency. C, maybe a partial refund, or other. Leave a comment. So let us know in the chat what you think. Should the government compensate TransJamaican Highway for the over $3 million lost during the suspension of tolls in Hurricane Melissa? Yes, no, maybe, partial refund, or other. Leave a comment. You can take that poll over on the community tab of our YouTube channel, on X, or in tomorrow morning's email, or you can just leave a comment in the chat. Up next, we've got your market recap, and our analyst is standing by. Market Recap is brought to you by MyMoneyJA, the official data partner of Money Media. Get 10% off your subscription with the code MONEYMISSION. The JSE Combined Index gained 1,800 points last week. That's 0.5%. 126 stocks traded across the main and junior markets for the week ending Friday, February 20, 2026. 56 made gains, 58 lost value, and 12 stayed the same. 94 million shares changed hands on the Jamaican dollar market, valued at $1.2 billion. TransJam was the week's most traded stock, with 16 million shares changing hands. It opened the new week at $6.76. Kintyre traded the second highest volume, starting Monday at 40 cents, and Atlantic Hardware and Plumbing rounded out last week's most traded stocks. It lost 12 cents to start the week at $1.90. Now let's see who had the biggest gains. CAC 2000 was the top stock last week. It opened Monday up 19%. Sagicor Real Estate X Fund gained 16% to start the new week at $7.94. And JPS 7% shares started Monday at $42.99, up 16%. On the losing side now, Pulse was the week's biggest loser, down 17%. It started the week at 83 cents. Margaritaville Turks lost 15% to start Monday at $11.81, and Epley Caribbean Property Fund SCC lost 14%. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 19 points or 2% last week. Massey was the TTSE's most traded stock. It opened Monday up 3% at $3.66 TT. West Indian Tobacco Company was the TTSE's top gainer, up 11%. Ansa Macal shares fell 15% to open Monday at $36.85 TT. Over in the U.S., the Dow Jones was mostly flat last week, while the S&P 500 and NASDAQ both gained 1%. At the pumps, the cost of 87 gas fell $2.19 last week, while 90 dipped $2.20. On the other hand, the cost of diesel fell $1.64, while low-sulfur diesel was down $1.66. In foreign exchange trading, it took an average $156.74 Jamaican to purchase $1 last Friday. That's 28 cents less than the week before. $1 Canadian cost an average $116.65 Jamaican. $1 British pound cost $210.98 Jamaican. And you could buy €1 for $186.25 Jamaican on average. Finally, on the crypto markets, Bitcoin prices were mostly stable over the last 5 days, trading at $66,211 on Monday. Meanwhile, Ethereum prices were down 1.5%, trading at $1,923 on Monday. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media. Market Recap was brought to you by MyMoneyJA, the official data partner of Money Media. Guess what, guys? The Money Mission workbook is now on 7 Crave Marketplace for same-day delivery within Jamaica. Exciting news. All you have to do is go to moneymissionja.com and you can select your delivery option. For global delivery, select Purchase on Amazon. For local delivery, fulfill the same day by 7 Crave Marketplace. Click 7 Crave. Or you can go to any of the following Fontana Pharmacy locations to get your copy. We're at Montego Bay, Fairview. We're at Waterloo. We're at Barbican Center and Barbican Square, Mandeville location, as well as Ocho Rios. Let's get this workbook. This segment of Taking Stock, The Analysts, is brought to you by Sagicor Investments. The views expressed in this segment are not necessarily the views of Money Media. This information is for educational purposes only and is not intended as financial advice. Please consult a licensed financial advisor before making any investment decisions. Welcome back. Before I introduce our analysts, let me see who else we have here. We have some responses to the poll question. So it was all about TransJamaican Highway, and do you think that government should compensate them for that 3.5 million US dollar loss? Charmaine says yes, they should compensate. Mickey says B. B was no, they shouldn't, because it was a natural disaster, a national emergency. Jackie also says B. OLP says we want the money or extension of concession. Lavaine says yes, a tax break is also acceptable. Ryan says yes, the government should compensate TJH as it's part of the concessionaire agreement between GOJ and TJH is what you mean to write, not TAJ, not Tax Authority Jamaica. Charmaine wants to know or is suggesting they can do the compensation in installments. Neil says B, which is no, because it was a national emergency and they made a profit anyway. I am Jason says, I think the tax reduction would be a good trade-off. Orville says 100% yes, it's a business. They did donate 100 million in building supplies. Lovebird says the same. A. TJH is a business, not a charity. They're in business to make a profit, and so they must be compensated. Supervillain says B. No, they shouldn't. Raquel says A and D. So A being yes, they should be compensated, and D being others. She says, remember, they have the money. And then O'Shane says government could increase taxes and compensate. Really, O'Shane? Is that what you want? Take from one to pay the other? So remember, the increased taxes is on all of us, just because you want to be paid as a TJH shareholder. I understand TJH Army is always active in the chat. But let's get to our analyst for this evening, who is one of the managers from Sagicor, Sharif Small. Hello, Sharif. Welcome to Taking Stock.
Hi, Kalila. Thanks for having me.
Great to have you. So tonight we are looking at Fontana's Q2 results. So give us the highlights. What are the things that investors should be looking out for on those results?
All right, so I'll be walking you through the 6-month report, which ended December 31st. So we'll be looking at the 6 months financial performance, the company's financial position, the cash position, comparable companies from a multiples perspective. We'll touch briefly on the price movement year to date, and then have some closing remarks. So just a quick overview of Fontana for those who are not familiar with the company. Fontana is one of the largest companies and retail chains in Jamaica. They have a wide array of products and product categories, spanning from beauty supplies, healthcare, to lifestyle goods. There's expansion and integration, and that's the mode they're in right now. And over the past 6 months to a year, you'd have seen that aggressive expansion by way of the acquisition of the Monarch chain. And they now have 11 stores island-wide, and they previously owned 7. So as to the report itself for the 6 months, revenues grew by 12.1%, and it grew to 5.3 billion relative to 4.78 billion in the same period of the prior year. And incrementally, that represents 577.4 million in terms of addition. Management attributes this to a continued integration of the Monarch brand, coupled with the momentum from the Aura business stores as well. Net profit, however, showed a bit of a decline. It fell by 36.5%.
Right. So I wanted to ask you about that, because you did mention revenues are up, but profit is down. And 36% is quite a significant number. So why was that?
Right. So the reason for that was really an increase in operating expenses, which increased 22.26%. So percentage-wise, it might seem a little low, but when you're dealing with large numbers, 22% is really significant. So that incrementally was about 302 million in terms of fall off in profits. This was also driven by the integration of the chains and the costs associated with that, coupled with the ramp-up activities that were related to the Aura location in Fairview. Naturally, if a business is expanding, you're going to have more staff, so salaries will increase. You're going to have more promotional activities, so your marketing expenses are going to go up. So it's kind of justified. From a margins perspective, net profit fell by 4.6%, fell to 4.6%, and this is relative to the 8.1% in the 6 months of December 2024. And margin
You mentioned Aura as well, and the increase in that business line, or at least the addition of that business line is the word I was looking for. How has that impacted their bottom line, or is it too early to see, the impact of that luxury section of their new business?
Yeah, it's a bit too early, and this was the 6-month report, so they don't really segment the items like that. So it's difficult to say right now. Yeah.
Okay.
So there was some margin compression, and this was evidenced by the increase of the operating expenses, which I previously mentioned. And the operating expense margin itself grew to 31% relative to 28.4% in the prior period. In terms of the financial position, as at December 31st, Fontana's total assets stood at 7.9 billion, and this was a 4.7% increase relative to its position as at June. So not the December 2024, but June, which would be more recent. And the main driver for that increase was cash and cash equivalents. So cash grew by 22.8%, and incrementally that was $364 million. So it's always good to have cash growing. As you know, the saying, cash is king. So we'll touch a little bit more on cash when we reach that section. Total equities stood at 3.1 billion relative to 2.87 billion, and this was a growth of 8.5%. And this was primarily driven by a 9.3% increase in accumulated surplus, which is really the retained earnings of the company. Total liabilities stood at 1.79 billion relative to 1.9 billion in the June period. As at June 2025, and this represented a 5.9% increase. And this was driven notably by a reduction in notes payable, as the company paid out 250 million. And of that 250 million, 100 million was in regards to the Monarch acquisition. So they paid that to a company called Girk Limited. Looking at the liquidity metrics of the company, the current ratio improved, so it's now at 2.3 times. That's up by 15.9%. The cash ratio is up 1.1x, and that's up 30%. And these metrics are good because, it's the current assets are cash relative to the current liabilities. So it's how much those current items can pay off the current liabilities. So it's always good to have those at least over one times. From a leverage perspective, debt to equity is now at 0.46 times, which really means debt is now just 46% of equity. So the company is not, leveraged per se, relatively. And as it relates to the cash flow, for the 6 months period, the net cash provided from operating activities fell by 3.5% to 378 million from 392 in the previous period. And this decline was attributed to the note repayment of 250 million, which I mentioned earlier.
So since it was because of the note repayment, would you say that isn't any reason for concern because of the reason the cash was used?
Yeah, I mean, that's typically a normal course of business. So it's not really alarming. If you were to, normalize it, then they'd have retained more cash. So it's not quite alarming. But that was also coupled with the profit before tax. So when you're doing the cash flow by indirect method, you usually start with the profit before tax, and then you add your non-cash items to that. So seeing that they had a lower earnings, the profit before tax was actually lower. So that also contributed to a little downtick in the cash. So the net cash from investment activities increased to 105 million from 33.5 million, and this was mainly driven by 88.79 million increase in the outlay of cash regarding their capital expenditure. And Fontana is a pretty aggressive company, so that's a normal course of business for them, and it's always good to have a healthy capex. As it relates to the net cash provided by financing activities, this increased to 90.8 million from a negative 429 million, and this was primarily driven by a 300 million cash inflow from some debt proceeds. So as a result, these cash activities led to an overarching increase in Fontana's cash and cash equivalent position for the period. In terms of multiples, we just looked at a few companies within the retail space. We have a small market, so it's not always perfect apples to apples. So we have to, pick the best out of the lot. So we had Indus Pharma, Mailpack, Fesco, SOS, and of course Fontana. So looking at those on the average, the PE would be around 17.81 times, and Fontana's PE currently is around 15.6 times. So from a relative perspective, it would suggest that Fontana is a bit discounted from a PE perspective at the moment. Yeah.
Okay.
In terms of price movement, Fontana currently trades at 7.55, and that's at yesterday. Year to date, this represents a 2.9% decline, which is not necessarily bad if the intrinsic value is good, and that means it's actually opportunity, so it's not really bad. And just to note that in January, the stock traded as high as $8.4, which at that point would have represented a 12.3% price appreciation. So just in closing, there was a fall off in earnings, yes, due to high operating costs. However, there was an improvement in the top line. As we said, it was 12.1%, which means that the company is still efficient. It's always good to have your top line growing, even though your earnings are falling off. It's still a good sign that the company is healthy. There's some degree of compression in the profit margin, but that will likely improve as costs are contained over time. And management did indicate that some of the costs related to the operating expenses are one-off or non-recurring costs. So we should see some containment there on the cost side going forward. Solid balance sheet growth in assets, growth in equities, and simultaneously we had a reduction in liabilities. So the company is growing while deleveraging. That's a good sign as well. Healthy cash position. The net cash provided from operations in this case was greater than net profit, and that is a key indicator that the company has high earnings quality. You might have some companies from time to time that have some type of accrual manipulation where they're booking in revenues, saying they're getting revenues, but the cash is not coming in and at the same time. So there's a timing manipulation, so to speak. So this indicates that the company has a very good earning quality. And finally, from a comparative standpoint, Fontana is trading below its peers in terms of PE, which we touched on earlier. So all in all, solid performance.
Who would be its peers? Like who are you comparing it to?
Yeah, man. So we touched on Indus Pharma, Mailpack, Fesco, SOS, and that was about it.
Some more
Some
similarly
of the other stuff
sized.
that could have been compared we're trading at negative PEs right now, so negative EPS, so they wouldn't be considered right now.
Okay, so you went with more similarly sized companies on the junior market, and not necessarily other pharmaceutical companies. You have Indies, but Indies is not quite comparable to
That's
Fontana.
hard to get that real apples to apples locally.
Right. So, I want to pick your brain a little bit on the Aura strategy, because I think it's a quite interesting strategy. I know we spoke briefly about it, and, the numbers, they don't segment the numbers, so we can't really tell what it's doing. And it's also early anyway to judge how well that strategy is working. But what do you think about this positioning into the more high-end luxury retail segment of the market?
Yeah. I think it's a good strategy. I mean, it's always good to have, both sides of the coin. I wouldn't say they have a low cost strategy, but they have a mid strategy there. So now tapping into that high end will unlock some value for them. And I think there's good potential there and high demand. I think they're indicated in one report that they had to restock very quickly to get some of those luxury items back on the shelves.
Mm-hmm.
Yeah, so it's a good strategy for
Trust me, the Fenty products are flying off the shelves. Flying up. As a Fenty girl myself, I can tell you.
Yes, that's true.
Yeah. And also I meant to ask you about the Monarch Pharmacy acquisitions. It's been just about a full year now since those were acquired. Do we have segmented numbers for that or no?
No, not as it. And it's not quite a full year. I think it was announced just this January. So it's not dovetail into the report fully as it.
Okay, well, Fontana is one that we definitely continue to keep our eye on. Thank you so much for that Q2 update, and we look forward to further updates from you as well.
Well, thank you for having me, Khalida. Pleasure was mine.
Thank you very much. That was Sharif Small, one of the managers at Sagicor Investments. Thanks so much to Sharif. Thanks to you for continuing to watch. We'll take our final break and come back with your comments. This section of Taking Stock, The Analysts, was brought to you by Sagicor Investments. How long now have you been saying that you're going to start investing? And all no. Well, the first step is to learn how. I'll walk you through everything you need to know to start investing on the stock market and building wealth. If investing is your 2026 goal, then this is where you start. Go to moneymissionja.com to get started. Let's get this money. Welcome back. Let me take some of your comments, and these were on Fontana. Roswell says, I really like the Fontana business. Its move on acquisition and a next unique store. I'm optimistic that their sales margin will be up in the medium term. Javon was asking, is it probably in Fontana's best interest to diversify their business a bit more as opposed to just doing pharmaceuticals and beauty products? Oh, I wish I saw that question before our analyst came off, but I want to know what you guys think. Do you think Fontana should diversify beyond pharmaceuticals and beauty? They do have a grocery section as well. They do toys. I feel like they're quite household items, housewares. I feel like Fontana is quite diversified, actually. I like the expansion into the luxury beauty, and I see the Aura brand being able to stand on its own. I wonder if Aura came from Sephora. Sephora is one of the dominant players. You have Ulta Beauty and Sephora in the United States that focuses on the makeup and the beauty and the high-end luxury makeup, the expensive makeup, as opposed to the drugstore brands. And those seem to be doing quite well. I need to go ask ChatGPT to do a comparative analysis of Sephora versus, Fontana now entering this market. But the Jamaican girlies are eating it up. When I tell you, the stock is flying off the shelves. I'm not sure how the perfume segment is doing, but it seems like, based on what I saw over the Christmas holiday, people are buying up the things them over at Aura. So, and now they're expanding. So they added a new Aura at Sovereign location, which tells me that it's working. Otherwise, they wouldn't add another location. So now they have Aura at Waterloo, Fairview in Montego Bay, and Sovereign. And it seems to be no stopping for Fontana. Definitely a stock to continue watching. Let me see if we have any other comments here that I want to take. Let's check the chat. Oren says, interesting. I need to scroll up. I wasn't looking. Raquel says, Sagicor strong. Javon says, TJH planning on raising dividends, hence the reason for the uptake and price increase. And I guess hence the reason they need to be compensated for that $3.5 million loss. Because yes, they were profitable, but remember that dividends are paid from profits, right? Odeon says, I didn't get all my Woodcat shares and I just can't wait for the listing so I can get the remainder of shares. And then from there, we have some of the responses to the poll question that we already went over. Kamisia says, interesting aura connection. Well, that's our show for this week. Thank you so much for joining us yet another week. It was my pleasure hosting for you and my pleasure having all of you in the chat. I always enjoy reading your comments. Thanks so much to our hardworking production team led by Sashel Williams. We've got Izzy Ramsey over on Instagram and Alexa Roberts, our editor. Thank you for everything that you do, for continuing to support the show. I will see you again next week. Remember to like the video. Where's Raquel, our like police? Remember to hit the like button, subscribe to the channel, share the video with a friend, let them know that Taking Stock is on. We have the latest and the best business information in Jamaica and the Caribbean. I will see you next week. Let's get this money.